Last year alone, the number of people who pawn things to borrow money from pawn shop increased by 81%. I'm not asking you to go and buy the pawn shop share. The latest figure, 1 month alone, people who pawn things at the pawn shop borrowed $600 million in 1 month. At least 1 year, at this rate, it will be 6-7 billion. Okay. In 1 month, 300,000 people pawn things. Okay. I'm not going to cite you the credit card statistics, that is even more frightening. But what you can see is a lot of people owe a lot of money. Okay. I think easily half the people who come to Block 108 on Thursday have Along problem. Okay. So, but we specialize for Along. I cannot tell you because this one secret one. Okay, you can't put pain on my house, right? But there are ways to deal with issues like this. So, in financial planning, you need to know that when you borrow money, okay, of course you must say that borrow money must be able to pay, right? But when people need money, what choice do they have, right? They have no choice, you have to borrow money, okay? So, when you borrow money, you must always find out what is the effective interest rate of the money. Most people don't understand. Give an example. You take a car loan, the guy tell you the rate is 2.5. Is the rate 2.5? No, the rate is probably around 5. It's normally about double one. Okay? Then you go to the money lender. What's the rate now? Now it's fixed already. Right? Cannot exceed 20%. Okay? So you got to find out what's the what you call the effective rate of the loan. You see the Along, what's the effective rate? Right? It's about 5 to 20%, per month. Right? So once you figure out the effective rate, then figure out who to pay first. I give you an example. All the people who come to see us, they owe everybody money. They owe the Along, they owe the credit card, they owe HDB, they owe electricity bill, they owe the town council, they owe everybody. So which one do you pay first? It's a bit complex, but I'm just trying to share with you. There's a way to figure out, because if they don't figure out who to pay first, they will never get out of debt because they will be paying the wrong person all the time. I give you a simple example that most people don't understand. You owe 5 credit cards. So who do you pay first? Most people are trying to pay everybody, right? Don't work one. Why? You owe the guy 1,000, you pay him $900, you still get charged interest of 1,000. So you have to pay the one that you owe the smallest amount. That means everybody you pay minimum. Then the one that you owe the smallest amount, that one try to clear first. Because if you don't that, you will never clear your debt. Because the way the interest is calculated. Now, most people also don't realize this. When you do a balance transfer on your credit card, what's balance transfer? You are paying 24% a year, transfer to another bank, only pay 6% or 10%. Say, very good, right? Yeah, it's very good. But that credit card is different way of charging. That credit card, every time you sign, the charging starts from the time you sign. It's not the normal credit card. You get the bill, you don't pay, then they start to charge interest. Okay? So you must understand the difference. Most people are clueless about this. Why are banks so happy to transfer money to you? Because they know if you need a transfer, chances are you will start to default, right? The moment you default, you will end up with only that credit card for the rest of your life. Then for the rest of your life, everything you buy, the moment you sign, you start paying interest. You cannot run. That's why they love balance transfer credit cards. So in this short time, I'll just give you some simple examples. But in the area of credit, there are a lot of things that when you have the problem, there are various should I say ways that you can do to go around. Otherwise, you don't want to be the case where okay, let me give you some other important snippets. You owe a lot of money, then you go to Bedok Reservoir, then you jump. Okay. Before you do that, I'm not saying you should jump, okay? But you do that, you need to know that your CPF is protected from creditors, But your CPF used for investment is not protected from creditors, So you have to sell all your investment, transfer the money back to your CPF account, then it's protected from creditors. If only the guy had come to see us before he went to the Reservoir. No. Little things like this make a world of difference, right? Right? Okay, no need to go to Bedok Reservoir. Doctor say you're very sick when you die, right? So if you do nothing, all your CPF that you used to buy share, buy unit trust, whatever, right? All the creditor will take. Okay? HDB is protected from creditors' right. So if you are doing business, right, then you think that you will have an issue with your creditor or whatever, right? Buy the most expensive HDB loan, nobody can touch you, right? Especially with the HDB loan. Okay, so there are all kinds of things that you can do to minimize your so-called credit risk. Most common problem in financial literacy is every month the money not enough, right? Anybody here like that? Don't be shy there. At some point in your life, this will happen to you, I guarantee you, okay? Right? At some point in your life, you will find that, hey, the money every month coming, not enough for the money is going out, right? If it happens once in a while, it's okay, but many of people that we see, it happens like, all their life is like this. So what do you do? So give you a simple suggestion. Get all your family members together on a regular basis and try and figure out where the money is coming and where the money is going. After a while, you get better, believe me, right? Your parents, your spouse, your children, got maid comes also, right? Everybody who in the house, figure out where the money is coming every month and where the money is going. After a while, things will get better. Serious, okay? That is from my experience, the best so-called money management exercise you can do. Even you have a lot of money, do it also. Because most people that we come across, the issue is they don't know where the money is coming or going. Questions?
So going back to the HDB question, I'm just wondering. So you're saying that the idea is to buy a property so that you do not have to pay as much, so you have CPF left over to invest. Is that what you're saying? So how do you work out how much loan? So for the young people, because HDB flats, even BTO, is extremely expensive now.
Yes.
And it will cost them 30% of their income.
Okay.
Do they clear the loan first, or do they do something behind?
Okay. So how to do that?
Okay.
When you buy a HDB flat, always try to borrow as much as possible. Okay. Here's the reason why. Most people they will use all the CPF to pay. Then they borrow the minimum. Then they cannot pay. 6 months later, the house gone already. But if you borrow the maximum, now how do you borrow the maximum? You only need to pay 5% down payment, let's say, right? All the rest of your CPF in the ordinary account, you go and invest on. So the money is outside. So they will see, oh, you only have 5%, they will lend you the balance. Okay? Always borrow the most. Why? Because the day when you come, you cannot pay, you got no reserve. You got all the money in the investment, slowly you can sell and send back to pay. Right? 1 year, 2 year, 5 year, 10 year, no job, no income, never mind. Slowly liquidate CPF investment to pay for house. Had you used all your CPF to pay and took a minimum loan, your house will be gone after 6 months. So generally, that is the basic principle. Of course, if you can borrow at 2.6% from the HDB or 1 point something from the bank, then you invest. You mean you cannot do better than 2.6 or 1 point something, in long run investment cannot be right. Because Temasek only had a return of 1.5% last year, so we always say it's very easy, but you see the experts normally also, right? But Singapore, uniquely Singapore, different situation. Okay. But generally speaking, right, if you have a globally diversified portfolio, your long-term return probably is around 6% or something, every 10-year average, right? What do most pension funds in the world do? The same one. Right? They have all kind of assets, then every month they need to pay the pension to the citizen. They sell those who have the most, then they pay. That's what they do. Okay? So that's how to handle the, what you call the amount you borrow. But I think the other aspect you're asking is, how do I know how much to pay for housing? So a bit complicated. Normally what we do is, in financial planning, we ask you what are your financial concerns in your life, what are your financial goals, then we will calculate everything. So we can tell you, for example, say, okay, if you buy a house that is 700,000, and then you based on your current situation, what is expected to happen to you in the future, you can meet all your goals, so no problem. But there may be a situation where we say, oh, if you use 7,000 for the house, you may not have enough to retire, you may not have enough to pay for children education, so maybe you need to, take a smaller house. So this is what financial planning account, right? Doing projections to let you see, right, whether you can meet all your goals and address all your financial concerns, right? Otherwise, everybody want to have bungalow, everyone to send the children to go to Harvard, right? So everything is there's a trade-off lah.
Yeah,
Okay,
but I
so-
think for most people, the young people that live is nowadays, it's BTO. And even the BTO is not cheap.
Yeah, so of course BTO you can choose the outline. You see, to give some real life stories. You see 10 years ago, nobody want to buy Sengkang, right? 5 years ago, nobody want to buy Punggol, You see, now you see which area you say in terms of the rate of return go up the most the last 10 or 5 years. Is this nobody want one? Because if everybody go there, the price very high, is it? The one nobody want one, when they start to move, right, the rate of return is higher. Singapore is a small place lah. No matter where you go, eventually the MRT will reach there, and then the shops there, things will happen one. I see even Potong Pasir now upgrading already.
Yeah.
Right? Okay, do one simple exercise. Who's the oldest person here? Anybody over 65 years? Over 60? Over 60 years old? Over 55?
All very young.
Cannot be. How can I am the oldest? I'm 58 already. How old are you, sir?
57.
57 now. You help us do something, okay? I'm going to do help us do something now. Yeah. Very simple one. I'm going to give you an example how to do retirement planning for yourself. Okay? You're 57, right? Okay. So, let's say you retire today. How much money you want a month?
Oh, as much as possible.
No, okay. Now, very good answer. But in real life, how do you figure out how much money you want in your retirement? I give you 2 tips. One,
How much are you spending?
okay? No, not how much you spend now. So imagine you retire, what you're going to do, then you calculate every month, I go to golf club, I know this, then you add everything up, your desired retirement income. Okay, so that is the best way. Another way is, just take your current income and take maybe 60 or 70% of it as the ballpark figure. Okay. So, how much you want a month?
How much I want? Oh, that's exciting. Okay, let's say 3,000.
3,000, okay. So, we normally have to choose a life expectancy, that means when we think the person will die. Okay, we normally use 88. Why? Because by 88, 80% of people will die, almost 90%. So, we normally think 57 to 88 is how many years? 31 years, right?
Yeah.
Okay, so 31 years, then we have to adjust for inflation, right? Now, inflation in Singapore, historically about 2, now it's 5. Okay? So we take 2% inflation, then we assume a rate of return on all the assets. Okay, so we assume 6. Right? So to get $3,000 a month, how much money you will need now? The answer is $645,392. Okay? So the question is, you add your CPF and all your other assets together, do you have $645,392? If the answer is yes, then happily you can retire today, you can go and tender your resignation. Right? So we assume 3,000, increase 2% every year for inflation, last until 88. Now don't worry if you say I live to 1995, because most studies show once you are 65 and beyond, every 10 years or so your spending power will drop 15%. So very old, you want to do also cannot do it. This 2% inflation auto adjust. So a lot of studies to know how we figure out this kind of thing. Okay? So if you say,
But what happens if inflation is 5%, which is...
yeah, of course, but then we can always adjust it, no? Yeah. But we normally use historical.
No, I see the number.
Let's see the number. 5%.
Software is not envisaged.
So you got 900, almost 900,000.
Wow.
Yeah.
I think the principle is not the figure, but the idea that someone can do those planning for you.
Okay. But generally speaking, what you're trying to, okay, I earlier mentioned what do most pension funds in the world do? That's what they do. Okay, they try to get what they call achieve a real rate of return of about 4%. Real rate means after inflation. So if they say 6 inflation 2, then the net is 4 roughly, or 3.9. So everybody should do this, because I can tell you, many of my friends who are very stressed when they lose their job, after they can't talk to you, they're so happy, Say, wow, instead of 600,000, the guy has got 900,000. I say, hey, you can live like a king, no? Got 300,000 extra. Right? So planning is free in the sense that planning is free. And so whether it's retirement planning or risk management or credit management or housing or healthcare, it's always good to plan now. And that's why we run this financial literacy thing on to, let you know what are things you need to consider, right? What decisions you make, okay? Especially the, be surprised that we do, some volunteers, we do financial counseling for bankrupts. Right? Every week there are about 30 over new one. They're getting younger. Yeah. We're seeing a lot of people being bankrupt, 20 plus. Okay? So, especially for the young ones, the main reason why they are bankrupt is because they never even consider the things that they need to consider. You see, I give you an example. You haven't got married, you buy an executive condo, then you change your mind, you can go bankrupt,
Yeah.
Because the penalty is 30%, 30% of 700,000 is 200,000 there. Right? So one, is your, must think first. Right? Okay, any other questions?